Hey, welcome back to Financial Tip Friday. I have a relatively simple, albeit important message I want to share today. And let's talk about your credit score. So we live in a society that your credit score is immensely important. It affects your mortgage rate, the amount that you're going to pay for a car note, your loan rates, and it's often something that people just gloss over and don't pay a whole lot of attention to. I know there's a lot of great websites or applications that'll help you track your credit score. Most credit cards offer this to you for free. I know personally we use American Express and they'll give you a free credit report. So when I was diving into this, some of the numbers surprised me. So what is deemed a good credit score? And we're talking about FICO scores here. But a good credit score is deemed anything over 700. Exceptional is anything over 800. Now, what I was surprised about is actually, according to a research report in 2023, the average American credit score is 715. Honestly, I thought it was going to be a lot lower than that. But take a look at the chart that we're throwing up here on the screen. Talks about the components of what makes up a good credit score and what goes into that calculation. So the two biggest things that stand out is the amount you owe, or revolving utilization, and your payment history. So those combined make up 65% of your score. So the amount you owe, think about if you have 3 credit cards with a total limit of $30,000. Now if you owe $15,000, you're using half of your revolving amount on a monthly basis. So the lower amount that's on your credit cards or your loans, the better. And then obviously your payment history. If you're on time with your payments, it's going to be hugely impactful for your credit score in the long run. One side note that not often, but I do get questions on is if you have an old credit card that does not charge you an annual fee, and that's a big asterisk there, you want to make sure you're not paying for it. But if you have one you're not paying for, just leave it open. It's not hurting anything. It helps build your overall amount of credit, and it can help your length of your credit history, which is an important aspect in this. You see it's 15% of your score makeup. So just be aware of where you are in that standing, because I know we'll talk about buying a home, for example. People put a lot of thought into moving and where they're going to go and what the house is going to look like. But unless you're paying all cash, which would be a blessing, you're going to have a mortgage, and your credit score is going to impact how much you're going to pay for a long period of time. So have a great weekend, everyone, and we'll catch up with you next week.